have clients that tell me, well, I've been with Wells Fargo for a long time or with Citi or Chase, and they're offering me the benefit of everything in one app and one account. I say, yeah, no, I got it, but it's gonna cost you more. Let's do it the right way. Let's go with, with the Encore mortgage.
Yeah.
And yeah, 99% of the time they follow, because there's reason behind it, right? So oftentimes, perhaps you could correct me on here. What I've noticed is that when you go to a retail bank like Wells Fargo or Chase, more often than not, for sure, their cost is going to be less for doing the loan, but the interest rate is usually higher. And
Yeah.
so that's really what I've been up to. So I'd rather people pay less in the interest, get the best interest rate possible, and save a lot of money a lot of money on the long run. But more importantly, when people work specifically with Bank of America, I don't mean to bash anybody, but like it's so hard to communicate with them. Like they don't update anybody, they don't update me, they don't update the listing agent. And so then now we're at the risk, as agents, we put the buyer's deposit at risk, because in the listing agent could cancel on time, issue notice to perform, demand to close, and then now you have the right to close without having to get buyer signature. And so now your deposit, the buyer's deposit, is at risk. And working with the retail branch, because of privacy laws, they don't want to update us. And and they only tell the client what the client wants to hear, but then the client doesn't know any better. Sort of like some examples, a rookie agent, and then for now I know they're just being told what they want to hear, versus reality. So I don't know. Is there any feedback that you like to add to that potentially?
Yeah, I always tell my clients that, well, I'll start with the fees, right? The reason that they advertise that their fees are lower is because really it's buried into the rate. So they cover a portion of their fees, or they say, we'll cover your closing costs. Well, that money isn't coming from nowhere. That money is coming because of that elevated rate. Over the long run, saving $500 or $300 up front, but you're going to have a payment that's, $100 more a month. It doesn't make sense. Okay, for the first 5 months, you've saved a little bit of money. Over 7 years, you've lost thousands. So it doesn't make sense. The second thing, and something that I think is so important, I believe the number is 40% of escrows fall out.
Mm-hmm.
That number in our office is probably less than 1%. So you can go into escrow, you can trust that property, that your deal is going to close, especially for somebody who's been out shopping for months. They fall in love with the place, they've been putting in offers and getting beat out, because that's just the market that we're in, to get into escrow and then trust it to, say a Wells Fargo or B of A or a Chase. And then that property, they don't get that property. I mean, is that really worth that $300 less that you would have paid at closing?
Mm-hmm.
I mean, in my opinion, it isn't. And, we'll make sure to get you into that property. If we tell you that we've got a deal, we've got a deal.
Yeah.
And,
we'll figure a way.
Yeah. So that's really what I think the difference comes down to.